Okay, so greetings, everyone, and welcome to the second webinar of the Energy Regulators Association of East Africa. I'd like to welcome you to this session where we'll be discussing and having a very good conversation on the energy leadership on the African continent, specifically how this energy leadership is shaping the trend of energy development in East Africa. We are going to have a conversation with 5 distinguished panelists. We have 5 distinguished panelists from the African Union, from the African Development Bank. We have a distinguished panelist from EREA, who is the anchor arm of regulation of COMESA. We have PwC and then EREA itself, who will be participating with us in this particular session. This is our second webinar as EREA, and would like to build on the momentum to see that at the end of the period and the season, we're able to harmonize the various initiatives that are happening across the spectrum of the energy sector, both across East Africa, but also integrating these into the wider continental aspects that are happening, and most especially what is good for the continent and us as various entities. So we aim at the end of this session to be able to answer a couple of questions. We want to know what is the real impact of all these initiatives that we are undertaking. We know that there are very many investments being undertaken in the energy space, but at the end of the day, how is this investment being channeled out to develop the local content, to develop society, to develop the community, and we should be able to chart a way forward. This webinar will also be available on our website. So very briefly, we'll have 5 conversations with 5 of our key participants. We have Engineer Atef Mazouk from the African Union. We have Dr. Kevin Kairuki from the African Development Bank, who will be joining us in this session. We have Mr. Isaac Otolo from PwC. We have Dr. Mohamedin El Nassar from EREA, and then we have none other than Dr. Geoffrey Maber from the Energy Regulators Association of East Africa. So with that in mind, I would like to now go forth straight into the meat of what we have, and I'll be inviting our first panelist, who's Engineer Atef Mazouk from the African Union. Engineer Atef, we all know that Africa right now, when you hear the numbers that we have, they're a little bit staggering. We have about 73 million people who would require to be connected every year if we are to have electricity for everyone by the end of 2030. With that in mind, one has to ask himself a question, is how can we go about fostering energy security for the African continent? Engineer Atef, I would like to invite you. Engineer Atef is the head of the Energy Division. He's with the Department of Infrastructure and Energy of the African Union. He has over 20 years experience on the African continent in renewable energy, electrical energy production, renewable energy, especially with wind turbines, energy strategies, policies. Thank you, Engineer. We are kindly listening and we are all ears for you. Thank you.
Thank you, Dr. Hallard, the moderator of this session. With my pleasure to join you for this very good discussion, important discussion about energy leadership. And it is important, as you mentioned, I'm working as the head of energy division at the African Union Commission. We have at the African Union put energy as a high priority because energy is the main issue for development of Africa, and also we have a lot of challenges in Africa, especially for energy access and energy security. As you mentioned, that by 2030 there is more than 700 million. It will have lack of access to electricity. But the African Union, they have Agenda 2063 to support, and we have also by 2030 to support the African people by increase the energy access. We have a very important project at the African Union in order to increase the energy access for not only for for the people, also for the developmental industry. There is no industry without energy, and also there is no development without industry. We need to increase the industry and to concentrate in the industry in the continent, to bring private sector for the invest in Africa, to invest in different area. It means that if we develop energy, it means that if we have a partner, our partner from different area, from Europe, from US, and from with China, in order to bring investment to increase the energy access for the human rights and also for the industry. I will highlight some activities at the African Union that mentioned or concentrate to increase the energy access and to support. I will start with one specific project for East African countries. East African countries, one of the region in Africa, they have a lot of potential from the hydropower, from geothermal energy, from wind, from the solar. And we, the African Union, mandated to support the policy and the strategy for the African countries to increase the energy access, and also to negotiate and to discuss, to give guidance to the member country to have a target from the renewable energy to increase the energy access. And we succeeded for something like that. We are a secretariat, but we are mandated from the African Energy Minister. We have a board, its name is SCC, Specialized Technical Committee. This is at the ministerial level. They give us a guidance to support the African countries. As I mentioned, I will give information about geothermal risk mitigation facility. This is a mandate received from the African Energy Minister to exploit geothermal energy and to bring the private sector to invest in geothermal energy for East Africa. We have 15,000 gigawatt in this Rift Valley, and we already mobilized more than 120 million from our partner, from European Union, from the FEED, from BMZ, and to support the African countries in this area. 30 projects already awarded with around 2 point something gigawatt to give a risk to give a grant contract for this project to cover around 40% for the drilling, 80% for the service study, and 20% for the infrastructure for this project. This is one of the main projects. And also integration and the electricity interconnection is very important to increase energy access with collaboration with the European Union Technical Assistance Facility. We are planning to launch single Africa electricity market. This is in collaboration with the REX, Regional Economic Community, with the cooperation with the Regional Power Pool and the Regional Center for Renewable Energy and Energy Efficiency. We are planning to present this study to the African Energy Minister at the second half of November 2020 to adapt, and after that we will launch this project at the Africa EU Summit. This is just a small information, and I will come back again for another question. Thank you.
Thank you, Engineer Atef. You mentioned a number of activities that you're undertaking with development partners, and I think that takes us to our next discussion. For those of you who are just joining us, I'll kindly request that if you can, and if you have any question, you could always post it in the Q&A, or you can always post it in the chat. If you do wish, you can also direct it to a specific panelist, and we'll still be able to attend to the question. Now to our next panelist, who is Dr. Kevin Kairuki. Dr. Kevin Kairuki is the Vice President for Power, Energy, Climate, Green Growth with the African Development Bank. He has over 30 years experience in power systems development. He's a chartered electrical engineer. If you talk of power sector development in East Africa, Kenya, Uganda, Burundi, Democratic Republic of Congo, Madagascar, Tanzania, it's very likely that you would mention Dr. Kevin Kairuki. With that background and with that session that we've had from Engineer Atef, Dr. Kevin, what would be the role of development partners in facilitating a robust infrastructure policy for increased energy access across investment in the East African region? We have seen commercial banks not taking up a lot of interest in this area, and it may be the case that right now the buck is turning more towards development finance institutions and also development finance partners. So, Dr. Kevin, what would be your take on this?
Thank you very much, Harold. To contextualize the role of the bank with regard to this important topic, let me start by referencing some of the outcomes of the African Development Bank investments over the last 5 years under what we call the Light Up and Power Africa agenda, which is the first of what we refer as the high fives priorities. During the period, that particular period, the bank's energy investments will facilitate over 3 million last mile connections and provide access to electricity to some 18 million people. From a capacity perspective, we will have added 2.8 gigawatts of additional generation capacity, and it is expected that during this period, 2 gigawatts will be in the form of renewable energy resources. Additionally, several previously approved projects, such as the Electrocana wind project, arguably the largest wind farm in Africa, was commissioned. What I would say is that, impressive as these outcomes may sound or appear, we believe more could be done. But to do so, significant investment is required, well above the level of current flows of capital into the region's power sector. In this regard, just to contextualize again, it is reported that to achieve the outcomes projected in the country's stated policies to reach universal access by 2030, and maintaining this level to 2040 would require annual power sector investments in sub-Saharan Africa of over 100 billion per year. The question then is, how then can this financing gap be closed in the face of economic sectors suffering from market failure and governance challenges where high real or perceived risks characterize the sector or on account of non-cost reflective tariffs, as well as suboptimal financial performance of off-takers whose many customers' ability and willingness to pay is not guaranteed. At the bank, we believe that financing Africa's electrification and energy transition requires new approaches to efficiently drive public and private sector capital into energy projects with positive and measurable economic, social, and environmental impacts. In this regard, and we are certain of this, innovative financing that attracts and therefore crowds in private sector capital is one such, is core to such financing if Africa's power infrastructure is to be developed at the rate and scale to sustainably meet the continent's aspirations with regard to the Sustainable Development Goals, in particular, energy access for all by 2030. As you clearly indicated, the question then is, who will supply the capital needed to enable this level of investments? My view is that the development finance institutions, such as the African Development Bank, are well positioned to use the instruments they have at their disposal and their convening power through relationships with the private sector actors and governments in their respective regional and non-regional member countries to act as promoters of and catalysts of more investments in the African energy sector. So with regard to facilitating robust policies and developments of environment that is conducive to private investments in the African energy sector, the bank is therefore involved, number one, in technical assistance and capacity building to governments to support development and enforcement of legal policy regulatory frameworks, providing for an enabling environment for private sector investment. Secondly, we organize fora and events such as the Africa Investment Forum and the Africa Energy Marketplace to connect public and private stakeholders across the continent to promote knowledge sharing on innovative methods of access to local and foreign capital. We also undertake what we call as the sector diagnostics tools, such as the Electricity Regulatory Index, the EREA. Further, the bank's contributions to attracting private sector investment in Africa energy sector includes project preparation support to de-risk projects at their earliest and riskiest stages, and crowding early stage private sector engagement and financing. For example, the bank through bank hosted funds, such as the Sustainable Energy Fund for Africa, Climate Investment Fund, etc., etc. We also provide guarantees, partial risk guarantees, another political insurance to improve the creditworthiness of borrowers and unlock financing from local commercial and commercial sources. We also provide liquidity support to local financial institutions through credit lines, including thematic credit lines that are tied to specific development impact and objectives. And also, finally, we also do structured we involve ourselves in structuring blended initiatives, facilities, and funds with specialized instruments that target designated economic and social sectors. So just to address this particular issue of financing, the key thing here is that we will have to come up with very innovative financing. And in this particular case, what the bank has done, and I think I need to mention 2 or 3 examples of innovative approaches to fill the financing gap of power infrastructure in Africa. One such is what I mentioned is what we call innovative blended funds. And an example of this is what we call the Facility for Energy Inclusion. The bank identified a significant gap in the availability of financing for projects of the sizes of about $30 million in the off-grid and on-grid energy sectors in Africa. So using the fund that I mentioned earlier, what we call the SEFA, Sustainable Energy for Africa funding, the bank helped design and structure a $500 million fund to structure and launch that particular facility, the Facility for Energy Inclusion, with 2 financing windows for on-grid projects and off-grid projects as well. Secondly, we have the Africa Renewable Energy Fund, or RF, and is one of the pioneers in the space of small and medium scale rural electrification funds in Africa. It has developed about 311 megawatts of additional generation capacity on the continent, and has raised $204 million through additional investments. So overall, we are also involved in a programmatic approach, what we call the desert to power. Under the desert to power, this is the idea here is to build up to 10 gigawatts of solar capacity in the Sahel region and provide electricity to up to 250 million people residing in 11 countries, namely Burkina Faso, Chad, Djibouti, Eritrea, Ethiopia, Mali, Mauritania, Niger, Nigeria, Senegal, and Sudan. But focusing on East Africa, the strategy of the African Development Bank to finance power infrastructure in East Africa, first of all, we look at the Africa Economic Outlook, which reported in 2018 that East Africa has the lowest average electricity access in Africa. This is about 26%. Although huge differences exist across the countries, There is therefore a significant scope for the bank's interventions. Accordingly, the latest, the ongoing 2018 to 2022 regional integration strategic paper for East Africa is articulated on 2 pillars. The first is the regional infrastructure development for economic transformation, based on the realization that prominent amongst infrastructure challenges are power shortages, low electricity connection rates, and high cost of electricity to manufacturing enterprises. Secondly, is that the policy and institutional frameworks for market integration, investment, and value chain development. In this regard, it is noteworthy that although bilateral power purchasing agreements exist, between countries exist, the South African power pool has not been established. Sorry, the East African power pool has not been operationalized. With this in mind, the regional power interconnection and related soft interventions to create an efficient regional power market are being prioritized. Cases in point of regional projects in which the bank is supporting include the Kenya-Ethiopia interconnector, which is being co-financed with AFD and the World Bank, and the 80 megawatt Rusumo hydropower project currently under construction and whose output will be shared amongst the countries of Tanzania, Rwanda, and Burundi. So this investment in energy infrastructure are also complemented by what we call upstream interventions. And this include supporting utilities to manage current liquidity issues. Secondly, supporting state-owned entities to develop new projects and expand existing ones. And thirdly, developing a regional geothermal resource development facility. And finally, providing capacity building to the East African power pool to operationalize the regional power pool by transforming the existing cooperative pool into a competitive pool. And that's all for now. Thank you very much.
Thank you, Dr. Kevin. I will try to contextualize your presentation from the perspective. We have Edwin, who is asking from the perspective of local content actual development. So we've heard of the projects that are actually being developed by the African Development Bank, for instance, the RF and the CIFA, and we've already seen some of the projects online. We've seen the projects happening across the board. We've seen some in Uganda, but are there specific initiatives specifically geared towards the development of local content in these particular countries where the African Development Bank is actually operating and initiating projects?
Thank you very much, Harold. Yes, indeed there is. As I indicated, we create special funds that lend themselves to providing support to projects that may be a bit too small for us. So for example, through the Facility for Energy Inclusion, we are able to support small developers of say 5 megawatts, really small projects that would otherwise not be financeable, would not call for the intervention by the bank itself. So that is one area whereby we finance these funds. These funds even go to the extent of financing solar mini grids, because once the fund is established, that fund can provide on-lending facilities to smaller entities. And that's how we are intervening at the smaller scale. Not directly, but through funds that we have established to catalyze the development and the financing of smaller projects, which may not lend themselves for ease of financing by the bank itself.
Okay, thank you, Dr. Kevin. Attendees, there's just one more question that I'm going to pose to Dr. Kevin for his attention. We have someone who's asking Dr. Kevin, why is it that some countries in Africa continue to implement reform access financing, while the majority of sub-Saharan African countries continue to struggle to access financing for energy infrastructure? My understanding of this question is that we see reform in particular countries, and that reform is actually being able to bridge the energy security aspects that we are concerned about and which the African Development Bank is actually spearheading. However, that reform is not spread across. So we have some countries which are lagging behind and some countries which are moving ahead. Are there any particular peculiarities to those countries that are not moving ahead? Attendees, you can always post the questions. Those that we can be able to answer orally, we shall answer them. However, we should also be able to answer them within the Q&A platform. Thank you, Dr. Kevin. Then we shall move on to our next panelist. Thank you.
Okay. Thank you, Harold, once again. There is nothing peculiar as far as countries are concerned. Countries seem to follow their different agendas. And for lack of a better way of putting it, there are countries that are slightly more progressive, that are more amenable to adopting the reforms that are necessary to be able to attract private investment. And here, actually, maybe what I can say is that it's very, very simple. And I've always cited this example, is that current follows the path of least resistance. But I also say that capital also follows the path of least resistance. So where a country appreciates the magnitude and the effort that is required to be able to develop the infrastructure that is required to meet the needs of its country, then it will look at its priorities and say that, and form a view as to whether it makes sense, and in most cases it does, to make the necessary adjustments in terms of reforms in their countries to be able to attract investment. Because at the end of the day, it is a fact of life that no matter how well-meaning, governments cannot be able to single-handedly develop their infrastructure. They will need to attract alternative forms of investments in terms of private financing in order to be able to meet the goals, the infrastructure gaps that exist. So what I would urge is that there is no specific rules. It's just a question of countries prioritizing, acknowledging where they are in their development path, and prioritizing the power sector and say, in order for us to be able to have meaningful development of infrastructure, of power infrastructure in our country, it is necessary that we diversify the sources of financing beyond budget support to be able to develop the project, so to develop our countries. And therefore, we will need to restructure the sector to be able to make it amenable to private sector investments. Thank you.
Thank you, Dr. Kevin. That takes us right into the heart of our next discussant, who is Mr. Isaac Otole from the PwC. Mr. Isaac has over 10 years experience in transaction advisory across the East African spectrum. He heads PwC in East Africa, in covering Uganda, Kenya, Tanzania, Rwanda, Zambia, and the Horn of Africa. He has over 15 years experience advising governments and the private sector on various aspects of transactions. He is part of the leadership of PwC's infrastructure group in East Africa. Isaac, I'd like to invite you to make a presentation to our attendees. Thank you.
Thank you, Harold, and thank you to my fellow panelists. I think like the previous speakers, I'll probably just go through a 10-minute presentation. And I think as before, we'll leave the questions to the end. So I'll speak about the energy landscape in East Africa, in particular, looking at it from an investment perspective, and really focusing on where the opportunities lie, but bearing in mind, as much as we have low electricity access in the region, I think there are other challenges to do with demand for absorbing the power that is available, but also looking at it from the perspective that a lot of the countries in the region are gearing up to add a lot of capacity onto their grids, but where do we actually direct this? But If we think about East Africa, and I think my two previous panelists have spoken about how the region is well endowed with different resources, from wind, where we've actually managed to have the largest wind power project in Africa sitting in this region. There's a lot of solar potential, geothermal, as Dr. Atef mentioned, there's over 15,000 megawatts capacity potential in the region. We've also got natural gas potential sitting on the East African coast, and also potential to develop other resources that are available in this region. But if we look at East Africa, at the moment we only have about 6,000 megawatts of installed capacity, with a regional population of about 170 million. If you compare this with South Africa, for example, where you have close to 60 gigawatts or 60,000 megawatts of installed capacity, and with a population of only about 57 or so million. And a lot of that speaks to the need to develop the industrial demand in our region, to be able to harness the capacity that we have, and also use that to really be a factor for developing our nations in the region. With 39% electricity access on average, a lot has been done in the last 10 years or so to grow that number from where it was. And considering that access is also growing as the populations in this region grow. And as we all know, East Africa probably has the highest rates of population growth in the world, and not just in Africa. So there's always a need for forward planning for investment into the sector. And it is good to see that with parties such as EREA, but also the individual regulators and policymakers in the region, a plan for power development, taking the least cost power approach in all the markets that we operate in. But beyond generation, there's a number of other challenges that the region faces. Lack of adequate transmission and distribution infrastructure is one of the key issues that need to be tackled. And we're gradually seeing steps in that direction. There's still the challenge of high cost of connectivity, but again, this will also need to be driven by the resources that are used to generate power, and also the demand that can essentially, with cost-reflective tariffs, if spread over a bigger population, could then essentially reduce that cost. So if we move over to the next slide, Harold, this is a snapshot of how the landscape looks in the region, with countries such as Kenya and Tanzania having some of the highest levels of capacity. But across the region, we do have tariffs that may be considered on an average basis generally higher than what you may see in more developed markets, which will also perhaps speak to the ability for the power that is coming on the grid to be absorbed, and also for us to attract the industrial demand that needs to come in. Some of the countries such as Burundi have a low level of installed capacity with very high tariffs, but perhaps a need for a drive to essentially have less reliance on some of the older resources that the country has been placing, but also look at bringing in cheaper sources of power, but also driving the demand question from that perspective as well. I think Rwanda, as we see, has been able to gradually increase its electrification rate, sitting at about 55% at the moment. Although the installed capacity does seem low, there are deliberate efforts to increase generation, whether it's from sources that are renewable in nature, but also taking very much a mini-grid and an off-grid approach to be able to improve access to electricity in that nation. But again, going back to the point that I made earlier, with only about 6 gigawatts installed in this region, with a population about 3.5 times what we see in South Africa, which has about 10 times installed capacity, a big gap, especially as we try and drive the development agenda in all the nations in East Africa. If we move to the next slide, Harold. A lot has been done, and I think has been mentioned by my previous panelists. There's a lot of efforts going towards policy and legislation to encourage improvement in what we have in the power sector at the moment to be able to prepare for the future. And for that growth, to really drive the growth in GDP as well. Great effort towards encouraging feed-in tariffs, and a number of countries in East Africa are currently on a feed-in tariff scheme, which has been able to increase the level of generation. A number of the countries in the region also do provide, and in some cases, very generous tax incentives for investors that are looking to invest in the power sector. And as we mentioned before, and I liked the analogy by Dr. Kariuki around the current following the least path of resistance. And also from a policy perspective, with enabling legislation, a lot needs to be done to encourage investment, not only for the power sector, but also for the consumers of power who will be coming into our country, perhaps as foreign investors to develop the industrialization agenda, as we see. Transmission and distribution, a lot has been spoken about this. So we are seeing efforts in some of our markets in Kenya and Uganda, for example, where private sector is being encouraged to participate, whether it's through further unbundling or looking at PPPs and transmission. Some questions around how the projects would be structured, what the tariffs may look like. Are you really going to look at an availability type structure, as you do see in majority of the IPPs we have in the region? Or will we be looking at something to do with wheeling, which may be less attractive for investors? From a distribution perspective, legislative reform in some of the countries in East Africa are encouraging private sector to play a greater role on-grid participation in distribution. Really perhaps driven at around leasing assets that belong to existing utilities, improving the level of service to that, and perhaps also developing new grids where there's latent demand for also the additional capacity that's expected to come on grid to be able to utilize new and perhaps more efficient infrastructure. If we go to the next page, where are the opportunities? And from a generation perspective, and again, looking at how government policy is looking at it, with feed-in tariffs that are coming into play, with perhaps more friendlier structures for capacities that are higher than the feed-in tariff policy. But what you do see is a common theme across the markets to bring in renewable as a start. And I believe for this region, geothermal is also considered as a renewable resource. But beyond that, as I mentioned earlier, a drive towards improving transmission and distribution infrastructure with private sector participation. There's some ongoing discussions around storage and how storage can come in particular with capacity considered to be much higher than what demand is, and seeing how we can utilize that better in our region. There was an article, I think, on Bloomberg last week, talking about the potential for small nuclear reactors of the region of 60 megawatts to 100 megawatts or so. And perhaps, and as some of the nations in the region have plans for development of nuclear, this could be potential for development in future. And the net metering question has also been brought. I think in Kenya, we have seen legislation talk about net metering coming into play. No active steps have been seen since the act was passed in 2019, but could drive the future for further investment and collaboration between private sector users and utilities in this space. If you look at how we are currently funding projects in the region, I think Dr. Kariuki spoke significantly about what the bank is doing to support investment into power infrastructure in the region. Having optimal debt and equity mixes in the structure of our projects, linked to the contractual arrangements, whether these are power purchase agreements or implementation agreements in the case of other infrastructure. But just trying to align that to be cost reflective and to ensure that both equity and debt holders are able to make a sufficient return out of it. I think as we've gradually seen over the years, tariffs have come down, and that's driven by improvements in technology that have made it cheaper, but also a better understanding of the risks of the sector. In countries such as Kenya, where you don't or are unlikely to get a guarantee if you're proposing a project to the regulators here. But that's really been driven by the track record of the off-taker in this market. The concept of non-recourse debt, I think, is fairly developed in the region, although the utilities do still borrow to some degree off their balance sheet. But with private sector investment into this space, you may see less of that. I've just spoken about guarantees and other credit enhancement schemes that are typically demanded. I think there's still a question on whether the letters of support that are offered to private investors can be better improved to give them better risk, better understanding of risk and protection in case things go wrong. Are there any other de-risking mechanisms that can come to play? And I think working with development partners is still a number of things that can still be done to support investment into the sector. Partial risk guarantees and political insurance schemes. I think we're seeing more appreciation for these and better pricing that come into projects, as again, there's a better understanding of risks for investment into the sector. Is there any funding that can actually go towards assisting developers, especially early stage developers, to be able to access capital to do the early stage work? In the case of geothermal, for example, is there any mechanisms that can go to helping de-risk the drilling risk at the onset for developers at a cheaper cost? And any other viability gap funding, again, that would typically come from development partners. If we go to the final slide, just to conclude. A lot of potential, certainly, for development of the sector, really driven around how to increase the demand, particularly from an industrial perspective. But also as we look at what we call the generation development race in the region, how can the countries in Eastern Africa work better to activate the Eastern Africa Power Pool, such that there's coordinated approaches to development of resources, and whether these resources are used in our markets or exported to the Southern Africa Power Pool or beyond. Perhaps better coordinated approach towards development of that policy that will also go a long way in encouraging investment into the power sector in the region. I think I'll stop there, Harold, and I believe I'll wait for questions to come later. But thank you for that.
Isaac, thank you for your presentation. I'll start you off with a couple of questions which have come through. But you will note that we have quite a lot of effort that has been made into the generation segment. Now that raises an issue of excess power. What are the plans for us to actually see that we consume this surplus power? We have a question from an anonymous attendee who would like that answered. What would be your take on that? But also taking up from where you pointed that in terms of investment that is needed for the sector and the efforts that are being made, what is the impact of politics on the investment climate?
Thanks for that, Harold. I think on the excess power question, it's twofold. There's a lot of work going from the perspective of government policy towards developing industrial demand. That is looking at development of industrial parks, special economic zones, and other enabling infrastructure to be able to consume the power that's planned. As I mentioned earlier in my presentation, a lot of the power development is driven through master planning in forms such as the least cost power development plan that envisions the growth of the economy and growth of industry. I think in many parts of our region, we've seen the development of industry not be as fast in the last 5 to 10 years or so. But resources, or rather projects, are still being developed in the region. And for me, then the question is, looking at the power pool, how can the development of resources be better coordinated in the region? I think these days we see less import across borders, but can we be thinking about exporting power into the south or into the west, or perhaps even across the Red Sea into the Middle East? The resource potential is here in the region, and it can be activated to be used, even if it's not just necessarily being used for what is happening in the region. On the political question, well, I think we all live in a political world. We can't get away from that. Politics is normally driving policy in many cases, but that should not stop the need. If there is a need for the power, if there is a need to grow industry, if there is a need to improve access to electricity in the region, which is still quite low, the politics should not interfere with the need to actually deliver those goals, even from an SDG perspective.
Thank you, Isaac, for your responses to that. I'll now go back to Dr. Kevin. I expect Dr. Kevin will be leaving us shortly. So Dr. Kevin, any parting thoughts, especially with regard to investment in the energy infrastructure sector on the African continent?
Two things. First of all, the one I will want to talk about is something that is very close to the bank. This is the issue of the existing overcapacity. The issue of setting up regional pools like the East African Power Pool is absolutely critical in ensuring that that power can go to countries that have less capacity. So that is critical because it will ensure that the countries that have excess capacity monetize that capacity for the development of their countries. However, the one thing that is definitely coming into our part of the world is privately financed transmission lines. And this is an initiative that the African Development Bank is taking very, very seriously. Because as I indicated earlier, there's only so much resources that we have as a continent. And that we have to be creative to be able to attract additional financing for our infrastructure. Right now, I think to a large extent, there is, I would say, maybe enough generation in the region. What we need is to be able to evacuate that generation to load centers, be they what Isaac called special economic zones or whatever. But in order to be able to do this, one has to go back to what we were speaking earlier about the reforms in the sector. You have to think about how do you charge for use of system? Because if it is privately financed, well, then the transmission line will be like a toll-free highway, so that kind of thing. So the only thing I would say is that is coming, and if indeed, as somebody asked me earlier, if indeed we want to be able to attract investment, be it in generation, be it in transmission, then it's imperative that the sectors are reformed. And Harold, I know you are a regulator. I was a regulator at one time. We must also ensure that tariffs are cost reflective. I always say that tariffs must be paid by somebody. Either the government pays for them or the customers pay for them. If the government doesn't have money to subsidize electricity, which are in most cases inefficient, it's imperative that the tariffs are set at cost-reflective levels. Thank you, Harold. I think I'll beg to leave and explain. I have to go somewhere else.
All right. Thank you, Dr. Kevin. With tariffs being cost-reflective, it would definitely mean the consumer would have to pay for the tariffs. Dr. Kevin, we thank you for your time that you've shared with us. And we look forward to having another further session with you and the African Development Bank.
My pleasure. Thank you very much.
We've heard quite a lot about what is happening in the power pool area as one of the avenues for us to consume the excess power that is being generated. So with that in mind, I would like to invite our next discussant, who is the Chief Executive Officer of RERESA, Dr. Mohamedin El Nasser. Dr. Mohamedin is, under his leadership at RERESA, we have seen a number of efforts towards the integration of power sector development in the COMESA region in Eastern Africa, Southern Africa, Indian Ocean, and we have seen efforts towards developing a regional market to guide cross-border power sharing. Dr. Mohammed, you're most welcome.
Okay, thank you very much, Mr. Harold, for introducing me. Also, I'm very happy to be with as a panelist, as a fellow panelist, to share some highlights on the topic that is assigned to me. It is on deepening energy integration in East Africa. So I will give some highlights on that one, and those highlights include general statement, also opportunities for energy integration in East Africa, and then I will touch a bit on energy trade in East Africa, then I will conclude with energy challenges and how energy integration in East Africa address those energy challenges. So as the general statement, I wish to indicate that energy is a game changer and enabler for economic transformation and a key driver for positive and inclusive growth. So I can always say that basically energy is a human right issue. African countries, including countries in East Africa, have abundant resources as indicated in the presentation of my fellow panelists. East Africa has abundant energy resources which are yet to be harnessed. Many regional economic communities in Africa, including East Africa bloc, have identified energy as a strategic intervention area that would require special attention. On opportunities for energy integration in East Africa, I wish to indicate that deepening energy integration in East Africa provides the opportunity to ensure access to affordable, reliable, and modern energy. These are the Millennium Development Goals, number 7. And also deepening energy integration in East Africa provides the opportunity to enhance the energy mix and flexibility. And we have heard that East Africa has abundant resources. For example, if you can take the case of Tanzania, there is gas there is hydro. Kenya, there is geothermal. Hydro is also, they go to Rwanda, Burundi, and so on. So if you put all those resources together, we will be able to enhance that energy mix, which will enhance the energy security and energy reliability and also and energy access. So always deepening regional energy integration will facilitate and will assist to enhance the energy mix and flexibility. Also, deepening energy integration in East Africa provides the opportunity to facilitate the expansion of energy infrastructure and upgrading of technology to provide clean energy sources, which to my view is very crucial goal that can both encourage growth and also help the environment. Also, deepening energy integration in East Africa provides the opportunity to harness the advantages of economies of scale and scope, and also to network the economies of scale and scope, which would eventually reduce the cost of doing business and enhance East Africa's competitiveness in its internal and external markets. And as you are aware, energy is not an end. It is a means for development, for sustainable growth, for transformation, and so on. So if you manage to reduce the costs of doing business through reduction of the cost of energy, I think East Africa will be able to enhance its competitiveness in its markets, whether external markets or internal markets. Energy integration in East Africa could be deepened through jointly utilizing the existing energy infrastructure, and also through future development and construction of regional energy projects. In East Africa, there are a number of existing and committed interconnectors which facilitate trade, and as we heard from the other panelists, for example, there is the Uganda-Tanzania interconnector, there is Uganda-Rwanda, Uganda-Kenya, Tanzania-Burundi, Rwanda-Tanzania, Rwanda-Burundi, Kenya, Tanzania, Ethiopia, Kenya, even there is DRC, Rwanda, there is DRC, Burundi, and so on. So those interconnectors are very important to deepen the regional integration, and they are very important to evacuate power from the surplus areas to the deficit areas, as indicated before. So one way to deepen regional integration is also to have more energy projects, joint projects, so that people can engage, people can assist each other, people can work together. The East Africa Power Pool, I think a lot have been said on East Africa Power Pool, has not yet established a platform for trading power within the region. And as indicated by, I think Dr. Kelvin says that now they need to transform the East Africa Power Pool from a cooperation of pools to a competitive pool. However, there are long-term bilateral trading, that is from 5 years to 15 years agreements between members countries do exist in East Africa. And the total value of the existing bilateral contracts within the East Africa is about maybe 1,100 megawatts or so, or more or less, but that is average. For example, there are some existing bilateral trade agreements between Kenya and Uganda, and Kenya and Rwanda, Ethiopia and Kenya, and Ethiopia and Tanzania, and so on. So it has therefore been established that electricity trade could be used to measure regional integration in the energy sector. And luckily, in our region, people now are cooperating together, and now they are undertaking power trade in the region. Eventually, more projects in the interconnection of electricity grids and joint development of generation facilities, in addition to projects in fossil fuels subsectors, would help make integration deeper in East Africa. Therefore, it is imperative that the East Africa regional integration agenda be given more support and more emphasis, and that the agenda should place more emphasis on energy development through expanding regional cooperation programs in energy. I wish to strongly recommend that energy programs of institutions whose mandate is to foster energy integration should be supported in order to be able to deepen this integration. For example, the regulators and their club, that's EREA, service providers, and the club that is East Africa Power, we need to support them in order to play that role, that important role of deepening of regional integration. And when you deepen your regional integration, I think you'll be able to reduce the cost of doing business, and then you will be able to enhance the competitiveness. Of course, as I indicated, energy by itself is not an end, it is a means. Deepening energy integration in East Africa could also assist to address energy challenges which the region is facing. Those challenges include challenges related to capital markets in terms of inadequate level and coverage of physical energy infrastructure due to sufficient investment in the energy sector, and also inefficiency and unreliability of existing energy infrastructure services and inefficient use of energy services. Also, there are some challenges related to market design, and those, as explained earlier, the energy sector market design continues to pose challenges to development and efficient running of the sector. Some of the issues surrounding market design include non-cost reflective tariffs, and I see those panelists before me, they did touch on that one, and this is very crucial, important issue, that to have a cost reflective tariff so that we'll be able to encourage investors, particularly private investors, to come and invest. Also, those challenges related to market design, I think there are some issues of enhancing regulatory frameworks in order to respond to current issues, the issues of opening up the market to private sector participation. So, Chair, I think let me leave it there, and we are available for further questions. I thank you very much.
Thank you, Dr. Mohammed. I would now like us to... Hello?
Hello?
Thank you, Dr. Mohammed. I would now like us to move to our next presenter, who is Dr. Geoffrey Maber.
Thank you, Harold. I hope you can be able to hear me.
Yes, we can.
Thank you.
Thank
you. I'm glad by the presentation that has been carried out by fellow panelists. And what I'm going to present essentially is the role of the regulators, in particular the regional regulators, to enhance, the development of frameworks, necessary frameworks, and also to spearhead a robust energy development in the region. Now, I'd like to probably point out three-pronged approach to development of the region, energy in the region, and also the role of the regulators. And one of the key things is the sustainable capacity building. Now, when we talk of the sustainable capacity building, we're looking at the educational infrastructure. And essentially, for us to be able to have this level of investment, for us to be able to, to change the region and to be able really to pick up with what is expected of us in the region, then we need to develop expertise and capabilities to the improvement and performance, and also to prepare individuals for the envisaged energy union. And by energy union, essentially, we're looking at in the electricity sector, for example, the generation, distribution tariff design, metering, trading standards, and all these things. But also we are looking further, in addition to electricity sector, we are also looking at the oil and gas subsector or the petroleum subsector, in which we are looking at fiscal regimes, modeling of the production sharing contracts and oil and gas management. So the fundamental principle here is, the higher the investment level in the energy sector, the higher the need for capacity development. And we've heard of the pools or the power pools. For example, the Central African Power Pool, the East African Power Pool, the South African Power Pool, the West African Power Pool. Some of them are still, under development. Some of them are quasi-developed. But for this to be efficient and for them to, to operate optimally, then it requires effective and specific capacity development to realize, effective operationalization. And I'm glad that one of the key elements the African Development Bank is key on is, to establish regional centers of excellence. And in our strategy as EREA, as a regional regulator, we are actually developing a regional energy center of excellence that will be able to provide capacity building, which is very specific, to enhance, the skills of individuals working not only in the pools, but also the utilities and those that are interested in, building up their very specific skills. But also this capacity building will also ensure top research and innovation. This center, I'll give you an example of Euphemia that was developed in Europe, and of course the price coupling of regions algorithms that was developed in the UK, in Europe, which essentially are market clearing tools. These were developed by young people. When you look at them, very young people who are doing research, and we are looking at capacity building, at this level. When you look at the energy sector generally, we have a number of people who are working there, well experienced. But most of them, when you look at them, there are very few young people coming up, to take up some of these elements. So that is one of the key things that we're looking at: continuous and sustainable, regular capacity building in the region. EREA, for example, we have been carrying out some research, especially like in net metering, and also in the petroleum sector. We have looked at the regulation of the strategic reserve models, and of course the LPG cylinder exchange pools. Now the success factor in this component actually is inherent in the establishment of a long-run sustainable educational infrastructure, to be able to provide regular training, tailored to the industry, what we call the mass skills development. But then another element under the, what is the role of the regulators in the, the whole industry sector, is to harmonize the energy policies and framework, and also to promote independence in the region. Now, we know that the main objective of a regulator or regulation is to correct the potential, economic and social harm resulting from the presence of natural monopolies. And so when we are looking at the architecture and the operationalization of the liberalized markets, then the explicit indicator here, we have to look at regulatory frameworks. And so one of the key elements that we are looking at is to harmonize the regulatory frameworks, which is essentially necessary to provide uniformity for trading rules among members, for example, the pools, and of course also within the individual countries. Some of these rules essentially include the rate making, the license issuance, contracts, regulatory bodies, and other regulatory processes. Now, I'd like to point out one of the key things, again, as indicated earlier, one of the key elements, and I've seen it in the question, is the emerging models of the PPP frameworks in the transmission network. This is one of the key things we're carrying out in the East African region, and I'm glad, unfortunately, Dr. Kevin has left the panel, but I'm glad that the African Development Bank is now partnering with EREA and funding EREA to be able to carry out, a study on the viability of the PPP frameworks in the transmission networks. And this is really a very innovative way in which we can be able to change our energy sector. In addition to that, probably just to mention a little bit of the development of the electricity markets, and this is one of the key things we are supporting when we are looking at harmonization of policies. We also look at what is going on in the market in Africa, in the region, and also a continent at large. In the electricity markets, we have few emerging trends. Well, of course, in the southern part, we are looking at, a quasi, development of the day-ahead markets, or what we call the short-term markets. But this has not been, carried out in the East African region, which is something that we are looking into. But for us to be able to, develop this kind of things, a regulator must come in then and provide a robust, skills for this kind of, development. And this may include, the soft skills and the hard skills. Essentially, we are looking at things like, market integration and congestion management, enhancing the regional cooperation. This is where the issue of politics comes in, because you have to balance. And then we have other elements like, the balancing market and the auxiliary services. and also looking at the, the integration of renewable energy into the system, capacity allocations, and several other components that are very key and also that are very important in developing the electricity market. Now, one of the key things of achieving these, regional electricity market, or to be able to integrate, then we need to have, harmonization of policies, legislation, and of course, institutional frameworks for us to be able to bring on board everyone and to be able to effect some of these elements. And then what is the importance of, what is the main objective of, regulatory harmonization? There are many ways we can be able to look at it, but I like to point out some few elements here. Essentially, we are looking at developing effective regional and continental energy markets. Then we're also looking at improving the operational efficiency and performance of the energy supply industry as a whole. We're also looking at creating a stable, transparent, and predictable environment to attract investment. We've had this from Isaac on the attracting investment. Those are some of the key things and the opportunities that are available. But also we have to look at the existing frameworks, improve on the energy frameworks, establish norms and standards, as well as frameworks for energy efficiency for the region. Now, lastly, I'd like to point out some of the key elements we are looking at. One of the strategies we are looking at as a regulator, to be able to share knowledge, and information that we have. Now, for us to enhance this innovation and enhance research, then we have to be able to create the tools that will be able to enhance sharing of knowledge and information amongst our members as well as the world at large. At EREA, essentially, we have developed a number of tools, and these tools, which you can be able to access them on our website in what we call an energy data hub, it essentially brings together all the countries in East Africa, where they can be able to share end use tariffs for various consumer categories. Other things include the demand and supply balances for the region. And in the oil and gas sector, we have the petroleum facilities, import and price progression in the East African region. Now, all this, we call it an energy hub. Now, this is one of the key things and one of the roles we are looking at, as a regional regulator, to ensure that we are able to share the information. We are able to build the capacity, for the region, and for these pools, to operate successfully and efficiently. Then we need to have the capacity that will be able to handle what might, the expectations of the electricity market. I think I'll leave it at that, and then probably answer questions if there are. Thank you, Harold.
Thank you, Dr. Geoffrey. Dr. Geoffrey Mabea is the Executive Secretary of the Energy Regulators Association for East Africa. It brings together all the regulators in the East African community in terms of harmonization. So yes, efforts are already being made to address the concerns on harmonization. I would now like the panelists, our distinguished panelists, to address some of the questions that we have received from our participants. I'll start with Engineer Atef Mazok of the African Union. We have a couple of questions. The first one is, what in your view are the key factors derailing the development of the Western Rift geothermal production provided by the GRMF that has so far been supported? Engineer Atef.
Thank you, moderator, for and also thanks for the question. Regarding geothermal energy, this is very good question, because this is have two sections for this question. Something regarding to the African Union as an organization, and something related to the country. We need to develop the capacity of the countries, and this is part from the African Union. The African Union organized in collaboration with our partner like USAID, organize a lot of workshop to develop and to increase the capacity of the African expert in the area of geothermal energy. And also we have a partnership with the New Zealand, and also to support the capacity building. And this is also organized regularly training with the New Zealand government for all East African countries to support and increase the capacity. And we have main issue regarding to the Geothermal Excellency Center that was launched in Kenya with the support from United Nations Environment Program. This is also organized a regular training. We have a different level of training to increase the capacity of the African expert, and the African Union supports this one for payment of the training material, for the ticket, for the GSA, for the participant, and UNEP, they contribute regarding to the bring instructor from different countries, especially from the Iceland, and the Excellency Center based in Nairobi, Kenya. And this is, we have regular project or regular training to support this one. This is regarding to the organization for increase the capacity. But there is another issue, it is very important from the country. The countries should have a regulation in order to develop geothermal energy in their countries. Feed-in tariff, to have a regulation to attract the private sector, to invest in the geothermal energy, to exploit the potential. As I mentioned at the beginning, we have a lot of potential. This is the two issues regarding the country level at the national, at the organization level. Thank you.
Thank you. Just before you leave the panel, and just before you leave the floor, I would also like you to address a question specifically on what the African Union is doing towards harmonization. I know you have mentioned them to our attendees who joined us in the process. Engineer Atef, if you could just recap on what the African Union is doing and the African Union division is doing to see that we have better harmonization, and also that we are able to achieve the SDG 7.
This is one of our mandate, just to implementation of the Sustainable Development Goal number 7. We are mandated, as I mentioned, at the Agenda 2063, and we have a lot of program related to support the African countries and to promote the development of renewable energy in the continent. We already mandated from the African Energy Minister to conduct a project to support small island state. The small island states, they are suffering from lack of energy access, and they high depending on the oil and gas, especially for the oil. For this reason, we will contracting very soon with the consultancy firm to conduct a study. This is study in order to promote the renewable energy for small island state, or unlocking renewable energy for small island state. We already secured the fund, and the contract, it is ready for signature. Just a matter of time, maybe before end of this month, we'll sign the contract. This is one of the issues. And also we have a collaboration with the renewable energy named REST for Africa, Renewable Energy Solution for Africa. We have around 800,000 US dollar to organize a training to support the African expert in the area of the renewable energy. But unfortunately, we already selected a consultancy firm to conduct the training, but due to coronavirus pandemic, this training should be organized physically. We cannot organize virtually. For this reason, we postponed the organization of this training until another time. This year, we also will conduct, we received 24 bids in order to support the development of the small hydropower. Small hydropower, this is very important for, especially for the rural area. And most of the rural areas are suffering from the electricity access. We conducted a study for the clean cooking. Clean cooking also, it is very important, and also there is impact for the women and the child from the smoke of the not using the clean cooking. Gender mainstreaming and the digitalization, smart, like smart city. We can use a smart interconnection, smart home. All this already considered at the program of the African Union. Thank you.
Thank you, Engineer Tef. And now move to our next panelist, who is Mr. Isaac. Isaac, you've pointed us to what is happening in terms of investment, specifically in terms of the generation segment, but the element of surplus power still remains. So to ask you directly, who would actually pay for this surplus power? And are we seeing a mismatch between what the private sector is doing in terms of the private sector actually being able to deliver and the public sector not being able to deliver? Is it actually a mismatch, or there is completely no mismatch? The question that I would ask you, and the question that the attendees would ask you, I think, is what comes first? Is it power that comes first, or it is industrialization that comes first and then power? Isaac, over to you.
Okay, thanks for those questions. I think to tackle the last one, I don't think there's a correct answer in terms of what should come first. Is it the demand or is it the supply? If we look at the East African region that was heavily dependent on hydro resources, towards the late 90s, early 2000s, a lot of countries actually went into what we here call power rationing, or what the southern market calls load shedding. And really that was because the demand hadn't been anticipated, and then essentially the generation resources hadn't come into play. I think subsequent to that, there was deliberate efforts to do better planning and really driven at increasing the capacity for generation. That's been driven by policy. We have seen a lot of generation come into the grid, whether it's done by public sector or private sector. But I think to answer the question on public versus private, as government, I think government has many roles to play. They can develop infrastructure. They don't have to develop all the infrastructure. If the private sector has the ability to come and do the same at a fair price as well at the end of the day, and also so that government can also redirect its resources to other users, there's no harm in having private sector participate. In terms of what may be cost reflective in that environment, of course, for a private sector investor, they need to have a good understanding of the risks. If that understanding is not very clear or vague, then you would expect to see tariffs be a bit higher than they should. But I think if you look at the example for the renewable energy auctions in South Africa, they started at tariffs that were above double digits, and gradually by the time they were getting to the latest round, they were in the region of 5 cents per kilowatt hour. But really driven by a better understanding of the projects, a better understanding of technology, a better understanding of how government would handle risks from their perspective. And also with increasing demand for those resources, then you did see also manufacturers essentially be able to produce more and bring economies which have then been passed on. Is that something that we're likely to see in other markets? It really depends on how quick the demand goes. And demand growth is not necessarily a straightforward question. We are looking at it primarily in this region from development of industry. But the question is, how quickly do you develop that and do it efficiently? And the question of who pays for the excess power, I think it really depends on how the power purchase agreements are structured. In a take-or-pay environment, whatever is not consumed or whatever may be generated but has not been generated and taken up, the eventual consumer will pay for that, whether or not it's generated. Are we likely to move into an environment where there's only pay for what is actually delivered. Again, it speaks to the question of demand and how quickly that can be developed. How to take risk in an uncertain environment. I think private sector will always price in risk that they don't understand. But the environment will evolve over time, and it will really be driven by growth of our economies in the region. Harold, is that answer satisfactory?
Yes, your answer is satisfactory, and I believe the attendee is very satisfied. Now, but to pick you up and carry on, what is your view regarding Chinese investment in sub-Saharan Africa specifically? Isaac?
Well, I think we as a continent should not discourage investment irrespective of where it is. I think it needs to be ethical at the end of the day, whether it's coming from Asia, Europe, or other resources. I think there's always the question around what is given back in return at the end of the day. But really, that is a question for government and how they handle that. I think at the end of the day, we need to comply with certain standards. Those should not be compromised in any way, irrespective of where the investment is coming from, even if it's coming in from the local market itself. So my perspective on that one is we should not discriminate as long as there's a fair treatment on the recipients of investment, whether it's on pricing or the type or quality of infrastructure that is developed, and also taking into account environmental and social issues.
Thank you, Isaac. Lastly, Dr. Geoffrey, the question of us being able to develop regional sources still remains a point of interest and a point of contention. We have aspects where, for example, Kenya, Tanzania, Burundi, Rwanda, DRC can be stuck in the development of regional resources. Egypt, Sudan, Ethiopia are caught up in this. How do we tackle the various diplomatic fallouts that keep showing face whenever it comes to the development of regional projects? Dr. Geoffrey?
Thank you, Harold.
What are regional organizations specifically doing to see that this is ironed out?
Thank you so much, Harold, for that. Indeed, I'd like to, first of all, assure you that, politics is part of our life, and it's part of it, and we have to, to stay with it. But one thing I would like to point out is this. We are getting encouraged when we have, several heads of states having their meetings, their summits. And this is one way in which we get the assurance that indeed they are working together. Now, we also have regional organizations like, for example, EREA and other, EREA. These are some of the regional institutions that also bring together key players in the energy sector to bring them to the understanding of the importance of working together. And once they see us working together, then obviously any subsequent investment and development, it will gain support from all the stakeholders and all the governments. We cannot really shy away from politics. This is there. But once we have our heads of state who are working together, and then regional organization and development partners coming in, and they see us working together, then definitely we will be able to achieve. Thank you.
Thank you, Dr. Geoffrey. I would like to thank the panelists for making the time to be able to share with us their experience and their knowledge in this particular webinar. It's invaluable that we have seen the efforts being undertaken on the African continent towards us specifically having universal access, but not just universal access, having available, efficient, and reliable universal access. Institutional development still remains a key concern, that the institutions that are involved in achieving SDG 7 remain relevant, remain important, and efforts should be harnessed towards that. Specifically, the creation of power pools, deepening regional integration remains key. But that notwithstanding, regional governments as well as international governments have to ensure that they support the access agenda and the reliability agenda on the continent. With that in mind, ladies and gentlemen, I would like to thank you for making the time to attend this webinar. Distinguished panelists, we appreciate your time that you've shared with us, all attendees. I hope this has been beneficial to you. And EREA, thank you very much for putting this webinar together. We hope we can have more such webinars to be able to think through what can we do better as a continent, what can we do better as a region, and what can we do better to ensure that ultimately we are not, when we are delivering electricity, we are delivering electricity in a sustainable manner. With that in mind, I'd like to thank all my panelists. I thank you, Dr. Joffrey. I thank you, Isaac, Dr. Mohammed, Engineer Atef, and Dr. Kevin in his absentia. With that in mind, I'd like to close this webinar. Thank you, attendees, and
Thank you very much.
all
Thank
panelists.
you. Thank you.
Thank you.
Bye. Thank you.
Bye.
Thank you. Bye.